So we're looking at the market analysis Colliers report here for the general region of Woody Creek property that we're looking at. Meaning general region, including Chicago, Naperville, and Elgin, all covering 3 different states: Illinois, Indiana, and Wisconsin, on the major metro markets there, and focusing on the apartment and or multifamily market. So this was recent analysis provided by Colliers that gives a full breakdown of it and kind of starts everything from high level to going pretty granular in a few different spots.
Cool. Tell us more.
Absolutely. So I think a couple of things that I thought were interesting or that stood out to me on this report. Like I said, you see the different areas that we're looking at, some of the information that's going to be included, but I'll just kind of pause right there with this snapshot. I mean, it's interesting, just geographically, the area we're looking at is covering 3 states. For conversations we've had, and really this opportunity in particular, I like that it did include the Chicago area. Those are a few things that kind of stood out to me, just kind of from we'll say that snapshot. We're looking at different market analysis, want to be local, regional, what have you. I mean, what you guys think that's a pro or a con?
I mean, I like how it starts with the bigger region, Chicago MSA, and then further down, it really dials into our specific submarket, because they're not the same. That's for sure. Mm-hmm. They're similar, but different.
Yeah, absolutely. And I'm so used to looking at market reports, being a broker. It's rare when you see a smaller metro, merged in with Chicago, because really there's 2 different markets there. You've got probably 8-9 million people in Chicago and far less there in that Northwest Indiana market. So, but the great thing about this report, it does focus in on that Merrillville, Portage, Valparaiso submarket, which is nice. And that's when you start digging into it, you'll start to see the comparison between the 2 and the density of the population there. It's intriguing.
Totally agree. Yep, I like that it goes high and gets more detailed as we go through. And you guys, if you have any comments as I'm going through it, just going to kind of highlight some things that I saw and kind of pause and chat as we're reviewing it. But on this portion here, I think it's pretty straightforward. Occupancy been floating right around 95%. And considered, call it shows a little bit more, by decade, what have you, but down even yearly, just sticks right about that 95%. So I think that's a really strong number.
Well, what I notice here in Chicago, which isn't the same as our submarket, the older properties have better occupancy than the newer ones, which is interesting. So our vintage would fall into the 2010s category if it was in Chicago, but it's not. I think that's because of affordability. I'm guessing affordability. Older properties are generally going to be more affordable, but just my guess, I guess, at this point.
Absolutely. And you also can see that where our rents lie as far as Chicago. Those folks in Chicago are not going to want to pay $2,700 a month. They'd much rather pay $2,000 a month. They're saving $700 a month on rent.
Big difference there. Yeah.
Very big difference.
So here's a little bit, like I was mentioning, recent years, again, showing that consistency in this little bit, just more support information. And I did like the by vintage and or style. The effective rent rates, concessions, what have you.
Well, from what I noticed, there was definitely concessions in Chicago, like you're going to see in any major market, but I didn't really see any concessions in the submarket, which was pretty interesting. I mean, not a surprise based on what we know already, but there's just in Chicago, you've got a lot of new supply, like most big markets. Although Chicago doesn't have as much new supply, what we're seeing in Phoenix or Dallas or other big markets, but it's just not the same where we're buying.
Yeah, right. It's really different. I did think that, call it on average 2,000 units per quarter. I didn't think that was, if anything, I was a little surprised that it was that low, but yeah.
Yeah, you'll see that. If you kind of read through the wording there, you'll see that the concessions are being given away for the newer properties more than the older properties.
Sure.
So it's like a sliding scale. Newer the property, the more concessions, the older the lease. Now, as far as new construction, the cool thing about Merrillville, Portage, and Valpo is there hasn't been any new units delivered in the last year. So that's surprising. So that means we'll have some places for folks to stay. They're not going to be able to go out and find any units. So I think there was 571 units under construction, but nothing delivered as last year.
Which, just rolling right into it here, I pulled this up to support what you're saying.
Yeah, so I was blown away by the occupancy rates, and even in one of the tables, that historical going back for the last 5 years. I mean, the occupancy rates really haven't even dropped below 95% in the last 5 years. Yep. And, when I look at this, everything that I do, I'm comparing to what I'm doing in Phoenix and Maricopa County. Maricopa County in 2024 had a record number of evictions, and our generally good occupancy rates and vacancy rates for the last several years have jumped up. So I think the stat that I saw, Maricopa County was around 8% vacancy rates in 2024 with those record evictions. And so when I compare that to this, 4% last year in 2024 in Schererville, that's half of what we have here in this big market. And if they've experienced record evictions or record vacancy in 2024 relative to what they're used to, just like we've experienced, and that's telling me that 4% last year is higher than it should be. Right? Which is already a ridiculously low number, but it's consistent. Look at that, 95, 97, 97, 96, 95, 96. I mean, that's consistency for the last 5 years. That's when people say the Midwest buying in a linear market. That's exactly what it is right there.
That's what the numbers are showing us.
Good point, Pete.
Absolutely. And Mike, to your point here, I think you were just stating these numbers before I had them up, but yeah, you can see the new units and inventory, very minimal past couple of years. We had 0 past 3 years even, just like you said. Moving on here, any other thoughts or comments?
Nope.
No.
Here it's just really, continued support information, occupancy side. Then we're looking at some of the effective rents. Like you guys said, it was pretty cool or interesting to compare. Now that, this is more of a call, the area we're looking at.
Yeah. So what I notice on this page is the greens and the reds on the right side versus Metro, right? And so the effective rents for our area, all red, when you compare to Metro. So what does that mean? It means it's more affordable. That's what it means. The rents are lower than Chicago Metro, which is good. That means they're going to want to come out to our place. That's what we see. And so that's what that red is. That red doesn't necessarily mean anything negative. It means that our rents compared to Chicago rents are much more affordable, which I think is a good thing and should be showing green,
Yeah, I think it's a more than excellent point to bring up. And just like you said, yeah, it's red. Why? Because you can kind of see it here, but it says the underperforming. Yeah, look, that means potential.
But yeah, it's more affordable. But the top section is green. Go up there, and what is it? What is that section? So that's occupancy. So okay, so our submarket has better occupancy than Chicago MSA, lower prices than Chicago MSA across the board. That's what this page tells me.
Here we're going to touch on the concessions piece again. Mirrors the two different markets comparison.
Again, we're not really given any concessions. This submarket doesn't have to give concessions compared to Chicago.
Exactly. That's then it does here at the end. It's a few of the projects that are going on in the submarket, which would be us. I think that's just good information. All just really concise snapshots.
I'm curious where exactly those are, but I just don't think that our property comps directly to an apartment complex. I think it's a different tenant.
I don't know where Saxon Partners Development or the link is, but I know where Crown Point is. That's where I used to live. That's my hometown, and that's probably 15 minutes east of Merrillville, maybe a little bit more. Maybe I would say with traffic, 30, 35 minutes. So yeah, you'll have some folks living in Crown Point. If they're from the area and traveling to Chicago, but not many. They're going to want to be in Schererville because it's so much closer to the borderline.
Yeah. Well, that conclusion really says it all, too, from Colliers. That's not something that we wrote. That's a third party. This is a third party report.
Right. This is all directly from Colliers. And just going to the screen, here is where the property is mentioned.
Yeah. Low vacancy rate. Woody Creek has 3 out of 24 at the time when I was there, and 1 was getting filled. So really it was 2 out of 24. But you take that one out, 4.46 vacancy rate. Average, Colliers concluded a general vacancy rate for the area should be 4%. I mean, that's an amazing number at a time when across the U.S. households are combining and vacancy rates have gone up across the U.S. Like it's not just Phoenix, but it's not happening. We're not seeing it here. Or if we have seen it here, then that tells us the general trend should be lower.
Yeah,
so, all really good signs. Yeah, all really good signs.
All real good signs. Yeah. So yeah, final takeaway, kind of high level. Again, great information. I like the way the different markets that they compared. I thought it was a little interesting, but yeah, still, that was really good information. And just like you said, for the purposes that we're looking at, it's given 2 thumbs up.
Yeah,
kind of across the board, man.
All right, cool. Let's see, Mike, you want to jump into what you got?
I'll pop off my screen.
Sure. So I wanted to share this with you guys, and I know I shared it via text message as well. So since we were taking the call, I figured I'd just throw this up on the screen and share it with you guys. This really stood out to me. 2025 apartment rent growth expectations across the country. And really some things in the article really stood out, which is what I wanted to point out, especially those who are asking what's going on in the market. And here's some data and data points that we can point to, especially with the strong markets there in the Midwest. So U.S. Apartment rents growth should pick up in 2025. The regional supply, pressures, demand, and historical performance will impact growth. So I'll just go through some of the highlights here. So as you can see, the map in focus, this particular map here is really pointing out some data points here. As you can see right here is Indiana. It's got a blue marker. So if we scroll down, we can figure out what that means. Gateway adjacent markets where occupancy supports historical normal rent growth. So that is a spot where they feel rent growth is going up. And then as you read down below, it'll start sharing cities like the Midwest are seeing significant demand in rents. Let me find it here for you. Give me 1 second. Did I pass it? Sorry, guys.
Right there, I think.
Yep, I did pass it. Sorry. So here it is right here. Some markets, particularly those in the Midwest and parts of the Northeast, are poised for stable rent growth in 2025. They're expected to see rent hikes of 3 to 4%, largely thanks to a balance of manageable supply and steady demand. Local economies in cities like Chicago will continue to generate a consistent need for apartments, allowing rents to grow at historically normal rates. So this just points to the fact of what we just discussed over on the data points that Colliers had. It's signifying the same thing and really solidifying exactly what we're telling the investors.
Yeah, that's cool.
100%.
You know, it's cool when you get national feedback on market info.
Mm-hmm.
And I feel like exactly everything that we are seeing and coming across all pointing at the same exact indicators, same exact trend lines. I mean, it's a linear Midwest market, right? And so when you ask, what does that mean? Well, this is what that means, you know?
Mm-hmm.
Absolutely. And just to drive that point a little bit further right here in this last paragraph, and this again goes back to the Colliers report. It says these cities are characterized by minimal new construction pressures and steady demand, allowing rent growth to follow. So as you pointed out, Pete, earlier, we've seen the rent growth over the last 4 or 5 years. It's been steady and linear. Now we've seen that over, as Life just pointed out, the last 3 years, there hasn't been any new construction right there in that Valpo, Merrillville, Portage submarket. So we're going to see a lot more future rent growth in that area.
Yeah. Cool. Good stuff. You got anything else?
That's it.
Okay.
Good stuff. Absolutely.
All right. Let's see. You want to unshare?